Hello students, welcome to Financial Accounting third lecture series. Today we are going to learn a problem with special adjustment regarding capital adjustment and goodwill calculation. Here's the problem. Ajay, Bijay and Sujay are partners sharing profit and losses in 2:3:5, their old ratio. They wanted to admit Sanjay into partnership form for 1/6 share in profits. They are given a balance sheet. Liability side you can find Sanjay's loan. So we can understand here Sanjay's loan was there in partnership form before his admission into partnership as a partner. ಅವರು ಪಾರ್ಟ್ನರ್ ಆಗಿ ಜಾಯಿನ್ ಆಗುವ ಮೊದಲು ಪಾರ್ಟ್ನರ್ಶಿಪ್ಗೆ ಅವರ ಲೋನ್ ಅಮೌಂಟ್ ಇತ್ತು. Asset side they have given various assets. I directly go to adjustment. Machinery is to be depreciated by 3,000, represents a loss, so revaluation account, debit side. Land and building revalued to rupees 30,000, so earlier it was 10,000. So 20,000 represents appreciation, so revaluation account, credit side. Stock written off represents loss, so revaluation account, debit side. After that, they are given goodwill valuation. Goodwill is to be valued as 2 years purchase of average profits for the last 3 years. So here, instead of goodwill amount, here they have given goodwill calculations. So here, we need to calculate the goodwill amount based on this formula. So that is the special adjustment of this particular problem. Sanjay's capital contribution should be 1/5 of the combined capital. So here again represents capital adjustment. Sanjay's capital, new partner's capital, should be equals to 1/5 of combined capital of old partners Ajay, Vijay and Sujay after making the above adjustment. After making all these adjustments, so these three partners combined capital should be found out first, and then out of which we need to calculate 1/5 portion. So that should be the Sanjay's capital count. Sanjay's share of capital will be transferred from his loan account. Already we have Sanjay's loan account in our partnership form. So what is the amount that should be contributed by the Sanjay will be transferred from loan account itself. Revaluation account. I'll consider the first three adjustments for revaluation account. Machinery, depreciation, so debit side. Land and building appreciation, so credit side, 30,000 minus 10,000. And stock value depreciation of 5,000 on debit side. So the remaining profit 12,000 rupees on revaluation of assets and liabilities transferred to partner's capital account. Remember, all the time the balance in revaluation account transferred to partner's capital account in their old ratio. So here the old ratio is 2:3:5. So the second step is the preparation of partner's capital account. In partner's capital account, the first entry is balance brought down. So capital 10, 15 and 20,000 they are recorded here. So after that revaluation account balance will transfer. So revaluation account debit side debit to partner's capital account. So by revaluation account the balance amount. And the third one general reserve. So general reserve given in balance sheet liabilities side 40,000. So this should be transferred in their old ratio. Always the general reserve transferred in their old ratio. After that we have to pass an entry for goodwill. So here in case of goodwill, instead of giving one goodwill amount, they have given the calculation process. The firm's goodwill is to be valued at 2 years purchase of last 3 years average profit. So here we are going to start with the goodwill adjustment. So first thing we need to calculate is last 3 years average profit. 20,000 plus 30,000 plus 40,000 divided by 3 years. So it is 30,000 rupees. So goodwill calculation formula is average profit into number of years purchase. Average profit 30,000 into 2 years purchase. So the total goodwill of the firm is 60,000. So the next step is to find out Sanjay's share of goodwill. 60,000 is the total firm's goodwill, out of which Sanjay's share of profit is 1/6. So 60,000 into 1 by 6 is 10,000 rupees. So for this 10,000 rupees, we need to provide journal entry. We know the formula for goodwill revaluation, that is new partners capital account debits to old partners capital account. Here we need to provide or distribute the goodwill in their sacrifice ratio. You can see in this program. So here they have given two information. The first one, old ratio and new partners share. If they have given only these two information, there is no need to calculate sacrifice ratio once again, because in this situation, their old ratio and sacrifice ratio remains the same. They have given some additional information. We may need to calculate sacrifice ratio or new ratio, but for this problem, no need to calculate sacrifice ratio once again, because they have given only two information, that is old ratio and new partners share. If you have some curiosity, you can calculate sacrifice ratio, which will be C. So the next step is to post these journal entries to partner's capital account. Sanjay's capital account debit. So in partner's capital account, Sanjay's column should be filled. So through sacrificing partner's capital account, so in case of Ajay, 2000, 3000 and 1000. And here the corresponding entry, Ajay's capital, Vijay's capital account, Sanjay's capital account should be credited. So these partners capital account credit side we should have it. So by Sanjay's capital account 2, 3 and 5,000. So after this we need to provide the entry for balancing figure or the capital brought down. So in this particular case we have capital adjustment. So let me show you how to treat the capital adjustment. Sanjay's capital contribution should be 1/5 of the combined capital of all partners. Here, Sanjay's capital should be 1/5 of the combined capital. So we need to find out the combined capital first. So combined adjusted capital, because after making the revaluation account entries and reserves entry, we need to find out the balance. So here the balance in partner's capital account, here you can see in case of Ajay, the total is 22,400. There is no balance on the debit side, so the remaining balance is 22,400. And here 33,600. There is no entry on the debit side, so it remains 33,600. Sujay's capital account 51,000. There is no entry on Sujay's capital account debit side, so it remains 50. Now, this is considered as adjusted capital. That means the capital balance after making these adjustments. So, we need to find out the combined capital. It is 22,400 plus 33,600 plus 51,000. That is 1,07,000. The combined capital of all partners. So, Sanjay's capital equals to 1/5 of the combined capital. So 1,07,000 into 1 by 5, that is 21,400. So here we are going to write in partners capital account, the balance carried down is 21,400 in case of Sanjay. So now we need to close Sanjay's capital account. We have already closed these three partners, but the last one, 21,400, after putting this balance, we need to calculate Sanjay's capital account. The debit side total 31,400 and credit side no entry. So this 31,400 should be transferred from Sanjay's loan account because they are given in the adjustment Sanjay's share of capital will be transferred from his loan account. So for that reason, this 31,400 transferred from Sanjay's loan account. That page. Balance brought down capital from balance sheet, revaluation account balance, general reserves. After that, Sanjay's capital account for goodwill. Here, sacrificing partners' capital account for goodwill. And the next one, we'll put the balances for old partners only. The old partners' capital account will close. So the remaining balance is 22,400, 33,600, and 51,000 rupees. Out of which we are going to find out Sanjay's capital. So combined capital into 1 by 5. So 22,400, 33,600 plus 51,000, 1,07,000 into 1/5 portion means 21,400. After putting this balance on debit side, we'll close Sanjay's capital account. So Sanjay's capital account debit side total 31,400 and credit side no entries. So this 31,400 rupees transferred from Sanjay's loan account. So this is the balancing figure for Sanjay's capital account column. Hope you understood the partner's capital account is the major part of this particular problem. Partner's capital account. So once we finished partner's capital account, we'll move on to balance sheet. Balance sheet is not a big deal. So here, land and building, revalued amount was 30,000 and machinery 30,000 minus 3,000, so 27,000. Stock 20,000, again minus 5,000, so it is 15,000. Debtors 30,000, no change, we'll consider as it is 30,000. Cash at bank 95,000. So here cash at bank, no change 95,000. If you have any entries to cash at bank, so in case of partner's capital account, we'll record it as the bank account either on the debit or credit side, or in revaluation account either on the debit or credit side. So if there is no entries to bank account in revaluation account or in partner's capital account, so we will record the same cash at bank 95,000 rupees. And on credit side, creditors 50,000 rupees, no change, will record the same thing 50,000. Sanjay's the loan account 50,000. So out of 50,000 rupees, they have transferred 31,400 rupees to partner's capital account, so remaining balance 18,600. And in case of capitals, Ajay, Vijay, Sujay, and Sanjay, which is given in partner's capital account. 22,400, 33,600, 51,000, and 21,000. So the balance sheet tallies at 1,97,000. So this is all about the problem. Hope you understood. Thank you for watching. Happy learning.